Welcome. First of all, it's good to have you here.
Thank you so much for having me.
You were never super convinced by the Sell America narrative?
I was not for a variety of different reasons. So a lot of it, to me, was based on what was happening with treasuries going up. But to me, the reason they had gone down so precipitously from January, in other words, from about 4.8% to 3.8%, was really in recession fears. And so as that started to ease a little bit, it was natural for rates to go up. And I just felt like, in general, a lot of the other things that we saw happening, the move into international and so forth, was, again, largely because of those areas being underrepresented in portfolios at a time when people were selling out of some of the mega cap tech names and so forth. So there were a lot of things that I thought were signals, especially looking at where investor sentiment went so pessimistic and so forth, that maybe things were overdone and maybe being looked at a little bit more negatively than I thought they would play out.
Let's not forget we were getting the downgrades to GDP. I think it was Goldman or others saying, OK, we're only going to grow 0.5% for the whole year. I mean, there were plenty of reasons to think, even if you don't believe it was Sell America broadly, that the facts had changed. So, sure. But did you just think, no, they haven't changed that much? Or no, I'm confident that where we are now is where we're going to get to. They're going to come to some kind of deal. They're going to back off from the way that things are looking?
Nowhere near as prescient as that.
Yeah.
Really much more that these areas that were being oversold were the opportunities that we get every once in a while with sort of the leading names, where they're the most liquid names that people have. They were being sold along with everything else. You saw literally everything coming down at once. So it was an opportunity to add to those names and buy. And the other thing is, I did assume a rebound. We went into this year thinking it was going to be a more volatile year, but overall a pretty decent year. We thought the volatility would be later in the year. It came early. Mm-hmm. But we, again, saw a lot of signals it was an opportunity to buy. And
you loaded up. I mean, I'm probably putting it too strongly, but you've been in a lot of the mega cap names, the Mag 7 types of names. You have you have Tesla, Apple, Nvidia. I mean, you'd think you'd be here, talking crypto and like all of these leading edge things. But those areas of the market, a lot of people told us, well, during the sell-off, when the rally resumes or when the new rally begins, it won't be the old leadership. Yeah. What do you make of those arguments, or the arguments that many made, which is we were overdue for a correction because of overvaluation in some of those areas? Yeah,
so we were overdue for a correction. We had actually pared back our exposure there a bit. This, again, was an opportunity we saw to buy back into those names. We still had them in the portfolio, but we increased our weighting there substantially, is really what was happening. And again, I think it comes back to, as people sell indiscriminately, a lot of what they're selling at the index funds, things like that are overrepresented in these names. When they buy back in, it's going to be the same kind of thing. There's a lot of market timing-oriented funds, for example, that have moved to the sidelines, are now down for the year. We're now trading back above 200-day moving average. We stay up here, they're going to have to buy back in. It's billions of dollars buying back into the S&P. They can't help but buy these names. Now, there may be a broadening out of leadership or a change in leadership that happens throughout this year. We just think this isn't the time to play it.